What's going on, guys? In this video I'm going to be sharing with you Stan Weinstein's Trading Secrets. This is an absolutely fantastic book, Stan Weinstein's Secrets for Profiting in Bull and Bear Markets. If you don't have it, go get it. It is well worth reading. So my name's Corsellis. I'm a professional stock trader and I want to help you get better at trading, start improving your performance. So what we're going to do in this video is look at Stan Weinstein's Trading Secrets. I'm going to teach you what Stan was looking for and how he was such a successful investor, speculator, trader, whatever you want to call it. So if you're new to the channel, please do subscribe, hit the like button, really helps me out, and leave me a comment down below if you enjoy this video. And also, if you are brand new to trading, I've created a beginners trading academy. There's a link in the description if you want to go check that out, completely free to join. So Stan Weinstein, what we need to do is start with the background and the fundamental principles of his philosophy. What was he looking to do? Well, so Stan applied what's called stage analysis. So this stage analysis you'll see many great traders do. So the likes of Mark Minervini, Nicholas Darvis, William O'Neill. Okay, they all did this stage analysis. Why? Because they want to buy stocks that are coming out of stage 1 bases and are in stage 2 uptrends. If they're trading on the long side, they want to avoid stocks that have had this stage 3 distributional top and now moving down to stage 4. Now, the stage analysis was actually, I think, originally developed by Richard Wyckoff way back in the 1910s, 1920s, okay, because he had his accumulation, then his markup phase, distribution structure at the top, and then followed by the phase 4 markdown. So again, traders kind of build upon each other throughout the years, but they're all trying to do the same thing. They're trying to buy stocks as they come out of these accumulation bases and they start moving into the stage 2 uptrend. Now, Stan talks about the difference between a trader and an investor. So if you're an investor, you'll want to be buying down here as we transition from stage 1 into phase 2 or stage 2. And if you're a trader, you want to be buying in the stage 2 base breakout. So we'll be coming on to that in a minute, but this is the foundational principle of Stan's approach, his philosophy, this stage analysis of he wants to buy stocks that are coming out of stage 1 into stage 2, or he wants to be buying stocks that are in this stage 2 markup and above their 30-week moving average, which is the 150-day moving average. So let's start looking at a few different things. Now, these are all from his book, so again, highly recommend you go and check it out. So as you can see here, this is just an illustration for the types of moves that you can get. And from what I've seen from Stan is when he's trading on the long side, he was a proponent of using the weekly chart for transitioning out of these stage 1 bases, where he might then be looking to campaign a stock. Now, this is very, very similar to what William O'Neill used to do as well. Those of you that have read this book here, How to Make Money in Stocks, and it's got all of those charts at the beginning, you'll note that they're all on the weekly time frame. Now, the weekly time frame has the benefit of reducing noise as well. On the daily time frame, and if you go to lower ones, it can get very, very noisy. It can send you more mixed signals and you can get shaken out of positions much more easily. So again, if you're campaigning stocks, do what these two greats did, okay, and stay on the weekly time frame. Darvis was very, very good at holding a stock for the entirety of its move. Richard Wyckoff himself was very good at that as well. So by using these more zoomed out time frames, it's going to enable you to do that more easily, spot these accumulation structures. Okay, so what Stan's saying here, and we'll go and look at some more in-depth ones in a minute, but what you're trying to do is you're trying to buy as you come out of stage 1, and then you're trying to hold for this much larger move. So we'll be looking at a few of these in a minute, but this is the guiding principle. You want to identify when a stock is in a stage 1 base, transitioning out of the phase 1 base into phase 2, and then these continuation patterns, okay, reaccumulation structures, whatever you want to call them, in stage 2, and then buying the breakout. So using a little bit of volume here. So what might this look like for an investor? As Stan says here in his book, ideal buy for the investor. So what we can see is we've got this stage 4 markdown. and then we transition into this potential stage 1. Now, is it going to be stage 1 every single time, and are you going to be able to buy the breakout at the ideal point every single time? Of course you are. You're not going to be able to do that. William O'Neill was right around about 60% of the time. Mark Minervini's right around, he's buying more in stage 2 uptrends, which are going to be like this. We're going to look at in a minute. He's right around 50% of the time. So of course you've got to be applying sound risk management techniques to this as well. So, but what we're trying to do is we want to idealize what is the perfect entry point, and then we want to reverse engineer back from there. So when we look at a chart, and this is probably what standards, this is probably what all of the great traders have done, is if they've looked at the chart and gone, okay, if I was to buy on this chart, where was the optimal moment in time to buy to get that asymmetric risk versus reward and be able to compound my capital very, very quickly? So they've all probably looked at it and gone, well, it's probably this point here, and Wyckoff would have said this point down here at that phase C spring type, but Stan had his rule for buying when the price goes above the 30-week moving average, which is the 150-day moving average. Okay, certain characteristics within the base as well in terms of what the volume is doing. What we want to see is for the volume to start tapering off here from left to right. So you can see that from left to right, the volume starting to decline. Now that indicates to us that there's absorption of supply going on. Okay, weak hands, as they're referred to, have chucked in the towel here on this decline. Okay, they bought up here, they didn't have a stop loss, so they didn't get stopped out at the higher prices, and as they come down here, okay, they are just chucking in the towel and going, I'm completely out of this. I'm down 70%, 80%, 90%. I've had enough now. And on the other side of that, that's the smart money, the big boys coming in, and they're saying, well, thank you very much, because they need two things. They need value and they need liquidity. So they have both as they're transitioning down here. So this is when the smart money is accumulating their position for the next leg up as we transition from phase 1 or stage 1 into stage 2. So with the volume declining from left to right, that's indicating to us that weak hands are being absorbed. Okay, the smart money is moving into the stock. We want to see that decreasing price volatility as we come up to the upper boundary of the trading range, so the resistance level. And what Stan's doing is he's buying at point A, and you can also be buying at point B and on the reversal. This here is a test of the resistance level. Okay, it's very, very bullish depending on the characteristics of the test. I'll go on to about that in another video, but basically you want to see diminishing downwards results. So what you want to see at point A is you want to see the volume accelerating. So you can see that here on the chart, the volume is starting to accelerate, and we want to see that with the widening of the price spreads as well. So if you're using the candlesticks, we want to see the bodies increasing in size. We want to see strong closes. I call that bullish synchronicity. So we want to see that at point A, and then when we test at point B, we want to see the volume starting to taper off a bit. And we want to see the candlestick bodies, if we're using those, start becoming thin. We want to see the price range for the day starting to decrease as well. Why? Because that's telling us that weak hands have been absorbed in this prior base in here. Okay, and actually there's just a little bit of profit taking going on here, but the smart money isn't distributing. Therefore, it's basically a no supply test is what I call it at point B. And then we're looking for that bullish reversal to happen. So this is where Stan is looking to enter his position and then be able to campaign the stock, okay, on the weekly chart for investors. Okay, so he was using the weekly chart for investors and above the 30-week moving average. Now, he likes to do this in conjunction with the Mansfield relative strength indicator as well. So what he wants to see is the relative strength start turning up as well. So I'm going to show you an example from the book, where I think it's Goodyear, in a couple of slides. And also at the end of this video, I'm going to be showing you a stock that is actually potentially setting up for this type of breakout right here. So make sure you stick around to the end. So this is now looking at the ideal buy for a trader. So what Stan was saying is for the investor, okay, be looking to buy here on the breakout of stage 1, more so on the weekly chart. For the ideal buy point for the trader, okay, we're now in this stage 2 uptrend. So we've had the original accumulation structure. Now we're in the stage 2 uptrend here, as you can see. So potentially doing this more so on the daily chart to really time this entry. So what we can see here for the ideal buy point for a trader is the 30-week moving average. That's the 150-day moving average is in a uptrend. So again, most of you probably heard of Mark Minervini, one of his criteria as well. So again, great traders just build upon each other. We're all trying to do the same thing, trying to take those asymmetric risk versus reward trades and compound our capital as quickly as possible. So what we can see here is we're in the uptrend. And now what happens is this period of consolidation with decreasing price volatility from left to right. So the swings of the price here are getting less as we transition over to this optimal entry point here. And what we can see as well is we also have decreasing supply in conjunction with our decreasing price volatility. Why do we know supply is decreasing? Well, number one, we can see the price volatility decreasing, but look at the volume as well. The volume is starting to taper off, and in this region here, okay, on that final pullback before point number A, okay, this is where we see the lowest volume within the structure. What is this telling us? It's telling us that absorption of the supply has happened. Okay, the smart money has been able to absorb the weak hands. The stock is now ready to transition back into this uptrend. So again, here is the optimal entry point in there, and then you can see this widening of the volume, the acceleration of the volume, widening of the price spread is what we want to see in here, and then the pullback test. And then you can see how Stan illustrates here, the pullback happens on a low volume, okay, for this point in here, followed by that bullish reversal. So what does this all look like on a chart? Well, what we can see is two entry points here. Okay, so the stock is in an uptrend, but the one that I really want you to focus on, sorry, just one entry point on this chart. So the one I want you to focus on is this one here. Okay, so what's very, very key, this is Goodyear. This is the price chart here. So what I'm going to do is just take out the magic pen. Okay, let's see if this works first time. Well, hey, look at that. Okay, so let me transition back to the laser. The magic pen has made its way into another video. So what we can see here is a long-term base that's forming. This here, this thick black line that you can see, that there is the 150-day moving average, so the 30-week moving average. Here's the volume down here. Okay, so this is the volume, and this here that you can see, okay, oscillating. I'm actually going to do that in a yellow, is the Mansfield, okay, the Mansfield relative strength indicator. So I'm just going to draw that on there for you. Just highlight it in yellow. Okay, so what you can see, let's go back to my laser pointer. So let's just focus on this first. Okay, so what you can see here that I've highlighted yellow, this is the Mansfield relative strength indicator, and you can see this zero line, okay, that runs through this level as well. So one of the things Stan talks about in his book is that he wants to be buying and kind of, you want to have as many things going in your favor as possible. You always want to be stacking the probabilities in your favor as a trader or an investor. So what Stan's saying in here is you can see the Mansfield relative strength indicator goes from negative. So down here it's at -2. So this is kind of -1 territory, and then we're trending up, and we're crossing this zero line. So the relative strength is now improving. We're crossing this zero line in here as we're also breaking out in here, and look at what the volume is doing. This down here is the volume. So we can see that volume starting to accelerate, the widening of the spread, and then you can see this going from just under $40, so around about $38, $39 or so, and then you can see it coming up here to, I think that's $80 or $70 up here. Either way, nearly 100% gain there, so very, very quick. But again, it's trying to stack the probabilities in your favor. So it's identifying this development of a trading range. It's then looking at what happens on the breakout, acceleration of the volume, widespread. Mansfield relative strength indicator going from negative to positive, crossing that line in there, okay, as we transition for the breakout. So this chart here again illustrates the points. You can see where Stan's looking to buy. Here's our 30-week moving average that comes down here, so the 150-day moving average. Okay, Stan's looking to buy in here. There's the pullback, and then we transition into the uptrend. Of course, you can also be looking to then short the phase 3 or stage 3 distributional tops that happen up here. So this is stage 3. So if I was to write it, magic pen is full force today. Okay, so this is going to be our phase 3. This is going to be our phase 4. Okay, phase 1, phase 2. Okay, I appreciate Stan calls it stage. But so what we have here is our Stage 3, let me get the laser pointer back again so you guys can see. So phase 3, stage 3 up here. This is phase 4, phase 1, phase 2 as well. So then it's trying to time the buy point in this region and go short here on the breakout following these climactic tops. So again, as Stan says here, the ideal short sale. Okay, so the magic pen is back. So this is our phase 2, phase 3, okay, phase 4, and again there was no breakout here. We see the breakout here, so we continue to stay in phase 4 as we transition downwards. So very, very key, but Stan is then looking to go short, okay, on the failure to regain back into that trading range, or on the break of the trading range here. Okay, so these are going to be your optimal places to go short on the break, but you want to make sure on the break it's all about so again, you need to understand the structural context of everything. You need to be able to read supply and demand, but also what happens at the particular moment in time as well is very, very key. So I'm about to go really geeky on you, but if you study fractal geometry, what happens at particular moments in time and similar sets is very, very important. So on a break of number A here, on the break of this trading range, what are the characteristics we want to see? We want to see a very bearish either bar, candlestick, so wide body. We want to see the bearish synchronicity, so we want to see the volume increasing as well at this point. And then for this phase B rally attempt, what do we want to see? We want to see a very weak rally. We don't want to see wide, strong spreads to the upside on big volume. Okay, we want to see that the volume is very low, price is struggling to go back up, because that's indicating to us that the smart money just isn't buying there. Okay, and then same at phase C. So I said at the end of the video I was going to show you a stock potentially setting up in a phase 1. So let's go and have a look at it. Now the stock that we're going to be looking at here is Xerox Holdings. So what you can see is we have had a very large downtrend in here. So this is our, as Stan would call it, this is our stage 4 move, and now we're potentially transitioning into stage number 1, okay, in here. So let's start having a little look at this. What we can see, we've got in blue here, this is our 30-week moving average. So what we can see is price is now starting to try and reclaim above it. Okay, that's absolutely great. What we have down here as well is our Mansfield relative strength indicator, and what are you going to notice about that? Our relative strength indicator, okay, is now starting to trend upwards. So this is great. So what we're trying to do is get back to this 0 level, okay, on the breakout. So how might this look? So we've got our stage 4 mark down, transitioning potentially into phase 1. We're now coming back above our 30-week moving average, so the 150-day moving average. We've got the Mansfield relative strength indicator starting to trend up. So in terms of our indicator, what do we want to see? Okay, we want to see price start moving up, moving up, moving up, and then a breakout, okay, of our Mansfield relative strength indicator above the 0 line, okay, in conjunction with price breaking out above this $20.52 line of least resistance. And then as well, what do we want to see for our moving average? We want to see this happening. If I make that, say, a light blue, okay, so then we start to see this continuation to the upside. So Xerox is looking very, very interesting, potentially as a campaign position. Again, it's going to be what happens at the particular moment in time. Do we get all of these things start to align, and do we get that optimal entry point as Stan has taught us in our book? So this is a fantastic book. I highly recommend you go out and buy it. It's great. It will really help you out with your trading. If you want to learn my process, which has been built upon the greats, so the likes of William O'Neill, okay, Stan, Jesse Livermore, Darvis, all of these people, I've evolved and adapted my process building upon theirs, then go and check out my premium membership. You get access to all of my courses I've created and continue to create. You get my watch list for the UK and US stocks. You get real-time alerts sent to you as well. You get the community premium member only chat rooms as well. So loads of great stuff. That's a link in the description if you want to go and check that out. And like I said at the start of this video, if you're new to trading or you're new to technical analysis, go and join my Beginners Trading Academy. I'm teaching you things like this. There's currently over 15 hours worth of content in there, absolutely free, all educational. All you need is an email address to sign up. So thank you very much for watching. If you're new to the channel, please do subscribe, hit that like button. It really does help me out, and leave me a comment down below. Thanks for watching.